All right, so this video is all about when to switch from an LLC to an S Corp. And so I'm going to answer that question as well as some others because I'm going to have to build a foundation for you to understand when it makes sense to switch from an LLC to an S Corp. So those questions, those additional questions that I'm going to have to answer in order to do so is, what taxes do you pay as a single member LLC, which makes you taxed as a sole proprietor? So we'll answer that. What taxes do you pay as an S corporation? When should you switch from being taxed as a sole proprietor to an S Corp? When should you form the LLC in order to get the flexibility that you need to elect to have that LLC taxed as an S corporation? And if you wait to the very end, I'll even show you where you can form your LLC and make that S Corp election for absolutely free. It's not a gimmick. I'll explain it towards the end, all right? Okay, so if it's your first time watching, my name is Navi Miraj. I'm a CPA who produces content all over social media to help you, the small business owner, save thousands of dollars in taxes. But let's jump right into the content of this video, which is that first question, when to make that switch from LLC to S Corp. In order to answer that, like I said, I'm going to have to first kind of show you some stuff that I've created here on this screen. All right. So let's kind of answer the question of what taxes would you have to pay if you're just an employee, okay? You're not a small business owner yet. You're just an employee working for, let's call it Google, okay? So if you take a look here on my screen, I've got a lot on here. Don't worry about it. I'm going to walk you through all of it. I'm going to say that you are working for Google and you're earning $100,000 of salary, okay? So we're going to use this example of this person named John, okay? John is an employee working at Google. So we're focusing on this column here, all right? What taxes does John have to pay? John's got to pay Social Security and Medicare taxes on his $100,000 of income. Now, typically, this amount of money is withheld from John's paycheck by his employer, which is Google, right? But John is paying these taxes. So John pays 6.2% as the employee, okay? $100,000 times 6.2% as the employee is $6,200. So John pays that amount. John also pays 1.45% in Medicare taxes, all right? So the 100,000 times the 1.5 is $1,450, okay? So that's how much John pays an employee in Social Security and Medicare taxes. Now, what you may not realize is Google, in this example, his employer, is also paying 6.2% and 1.45% respectively. So they are also paying into Social Security and Medicare at the same amounts, all right? But again, John's not paying that. John's employer, Google, in this example, is paying that. Now, if John earned more than $200,000, then this additional Medicare tax would kick in, all right? And that's not the only taxes that John has to pay, right? If that was the only taxes John had to pay, he would probably be pretty happy. But John's also got to pay income tax, all right? So in this example, I'm just saying that John pays effective income tax rate at the federal level of 15%. So 100,000 times an effective interest rate of 15% is 15,000. Now your income tax is going to depend on where you fall in the federal income tax brackets, but in this example, again, I'm using 15%. Now I'm also going to say that John lives in a state where his income tax is like a flat rate of 5%. Some of you live in a state where you don't have income tax. Others of you live in a state where you have a progressive tax rate structure. So the more you earn, the more you pay. I'm just going to use an example where, hey, this person lives in a state, it's 5% flat. That's how much they pay. All right. So the $100,000 times the 5% is the $5,000. All right. So the total tax paid is $27,650. And we break that out here. We say the Social Security and Medicare portion is $7,650. And the federal income tax, $15,000, state income tax, $5,000. Okay. The total tax, $27,650. Hopefully you're still with me. All right. Now let's talk about what taxes John would have to pay if he earned $100,000 and he's a sole proprietor, or he's taxed as a sole proprietor. Let me pause right there because you might be wondering, well, what is that? What does that mean? So if you form a single member LLC, then by default, you're taxed like a sole proprietorship, okay? And if you don't form an LLC, let's just go out there and you start performing your services or selling your products, you don't form an entity, you're taxed as a sole proprietor, all right? So what taxes does John pay as a sole proprietor? In this example, I'm saying John's profit in his sole proprietorship taxed business is 100 grand. Now, in order for him to make 100 grand, he probably incurred some expenses, right? So he might have had revenue of 140,000, 40,000 in expenses. He lands at $100,000 of profit. What taxes does he pay? Well, guess what? John is now the employer and the employee, all right? So he pays both sides of the Social Security and Medicare tax, all right? So he now pays $12,400 in Social Security and $2,900 in Medicare tax. You see some of the asterisks here. You can kind of read that on your own, but basically, the Social, you can just pause your video player, give that, those asterisks a read. It should make perfect sense. All right. All right. So John pays both sides, right? 12.4 plus the 2.9. That's 15.3% in Social Security and Medicare taxes. What other taxes does he have to pay? Well, his $100,000 of profit is his, sort of income. And so he's going to pay income tax, and at the federal and state level, just like he would as if he was an employee working for Google. All right. So the income tax number is not going to change, whether it's federal or state. All right. But how much total tax does John pay as a sole proprietorship? He pays $35,300 in total tax. And the breakdown is here: 15.3 in Social Security and Medicare, 15,000 in federal income tax, 5,000 in state income tax. All right. Now, what taxes could John be paying? If you watched the Navi Murad CPA channel on YouTube or whatever medium you're watching on, and he learned that he should be taxed as an S corporation. So let's kind of look at that example now. All right. So as an S corporation, here's what happens. John still made $140,000 in sales, still had $40,000 in expenses, and he landed with $100,000 in profit. What John's going to do now is he's sort of going to maximize the best of both worlds here. So he's going to treat himself as an employee for $40,000 of his profit, and he's going to take the other $60,000 in the form of a distribution. All right. So he still made 100 grand, 40,000 is paying as salary, $60,000 is the distribution. This $40,000, you might hear that called reasonable compensation by the IRS. He needs to pay himself a reasonable compensation for his services to the business. All right. So what does John pay, as the employee of his S Corp? So he'll now be considered an employee of his S Corp, and he'll pay taxes on this similar to when he was an employee working for Google. He'll pay $40,000 times 6.2%. That's the 2480, right? And $40,000 times the 1.45. That's the $580 that you see here. Okay. Now, John's employer, which is John's S Corp, right? It's kind of still him. He has to pay the employer side of Social Security and Medicare. So he pays the same amount, right? 40,000 times the 6.2 and 40,000 times the 1.5 gets you these numbers here. So what other, let me pause. Let me not go to that. Let me skip over that. So you can see that John's S Corp paid $3,060 in Social Security and Medicare taxes. And John, as the employee, is paying $3,060 as well as the employee of the S corporation. Okay. What other taxes does John the individual, right? John the employee, what other taxes does he pay? He pays his federal income tax and his state income tax. The reason why is because an S corp is what's called a pass-through entity. So although you'll file a separate tax return for the S corporation, all of the income generated from the S corp will flow into John's individual tax return, and that's where he'll pay the tax. Okay. So the only taxes that John's S corp pays is the employer side of the Social Security and Medicare taxes. Other than that, John himself is on the hook for his portion of Social Security and Medicare, the federal income tax on his business profit, and the state income tax on his business profit. So if you want to sum all this together, now guess what? John's paying $26,120 in total taxes. That's lower than he paid as an employee, lower than he paid as a sole proprietor or a single member LLC that's being taxed as a sole proprietor. And so it's the lowest option, right? You can see the breakdown. How does the breakdown compare between Social Security and Medicare taxes? Well, the S Corp wins. And that's where the S Corp strategy saves you all the money. The point here is that you're not making any tax savings. You're not having any tax savings on the federal income tax or the state income tax, right? It's all related to how do you save money in Social Security and Medicare taxes. So you can get the same tax, deductions that you can if you operate as a sole proprietor or you have, an LLC that's taxed as a sole proprietor. The only thing that changes with the S Corp is it gives you that eligibility to sort of turn on that S Corporation switch when you're ready. What I mean by when you're ready is going to be a great transition to our next sort of question that we're going to answer, right? But before I do so, let's kind of go down this path here. So Social Security and Medicare taxes, $6,120, $15,000 in income tax at the federal level, $5,000 in state income tax at the state level. All right. So, when should you form an LLC? Let me not scroll down. I want you to see all these numbers. Well, it only makes sense usually when the business has enough profit to support the additional fees that come along with the S corporation. What do I mean by that? What I mean by that is, you're going to save roughly $9,000 in taxes, right? Where does that number come from? That's, you were going to pay $15,300. Now you're going to pay $6,120. The difference is $9,180. But there's some costs associated with that, right? You're going to have a professional probably prepare your taxes. You're probably not going to want to prepare the S Corp tax return on our own. So I went high here. I said, hey, let's say they charge you $1,000. You're going to need payroll service. The reason why is because that reasonable compensation has to be paid via payroll, and you're going to pay payroll taxes, and you don't want to be doing that on your own. So you're going to probably get a company to help you with that. They're going to file paperwork and taxes quarterly. So let's just say that costs $600 for the year. All right. And then you're going to have annual fees to maintain your LLC, right? Now, technically you could have an LLC over here as a sole proprietor and you'd incur these fees anyway. But depending on your state, you might pay as little as $50 to maintain your LLC. If you live in a state like California, it's probably waived for the first year, but in year 2 and onward, it's like $800. Okay, so put that into the budget. All right, so your total fees are $1,850 in this example. So you still have a net sort of tax savings of about $7,000. Now, if you're watching this video and you're a tax preparer or a CPA, I get it. There's the qualified business income deduction, and that plays a role in all of this as well. But this is just a generic sort of video for the average viewer, which is a small business owner on my channel. All right. So we can play around with these numbers a little bit, right? Let's say you don't have $100,000 of profit. What if you've got $40,000 of profit, right? I mentioned that was kind of the number that you want to make that S Corp election. Well, you can see how the taxes sort of change here automatically. But if you're making $40,000 in profit only, well, maybe you want to pay $30,000 of that via salary. Okay. And so you can see how the math sort of flushes through here. Again, pause your video player and you'll see that you're not really making any money here, right? Yeah, you can maybe save $1,530, but these fees are going to eat up those savings. So you're in the negative. All right. Let's say you want to be a little bit more aggressive and you make $40,000. And you want to pay a $2,000 salary. You want to pay a $20,000 salary, right? This is probably what you want to do. Split it in half, 50-50 at this profit level of $40,000. And so here you can see that it starts to make sense. So that's why people say, hey, you'll see a lot of CPAs out there or YouTubers saying, hey, if this makes $40,000 or more in profit, then you can start to look at that. If you're smaller than that, right? If you're at $30,000, you're not there yet, $30,000, and you want to split this, let's say 15 and 15, your tax savings is probably not enough to go through this sort of hassle and do all this, right? There's going to be some other deductions that get involved here, and the math is just not going to work. You can go higher, right? I'll just give you one more example. Let's say you're making $250,000 in profit. I don't know how much you're going to pay that in a salary. Let's say in a salary, let's say it's $80,000. Well, then you can see that this is saving you around $11,000 in taxes. The reason why is because now you have the additional Medicare tax that's going to come into play if your tax is a sole proprietorship. Again, we can kind of read that, but basically if you earn over $200,000, the additional Medicare tax kicks in on the amount over $200,000. So $50,000 is being subject to this additional Medicare tax if you're taxed as a sole proprietor, but you're not getting that as an S Corp because as an employee, you decided to pay yourself only $80,000. All right. So that's how the math sort of works out. When should you form or switch to the S Corp, okay? So we talked about really the financial piece of that, which is like 40 grand or more in profit, right? That's when you want to make the switch. But let's take a look at this little slide that I created for you here. So this is a calendar, right? Let's go through this together. It's just January through December, right? I'm saying you got revenue of this amount throughout the year, expenses of this amount throughout the year, your profit is this amount throughout the year, right? So your profitability is 51,400. So based on what you just heard, you're probably like, okay, yeah, you gotta be an S Corp here, right? Well, let's take a look at two different people. We've got Jan. Jan watches my YouTube channel and other, posts that I write. And so she says, hey, I know I got to form this LLC at the beginning of the year as soon as I start my business. So Jan's S Corp is going to have all this Jan's S Corp is going to have all this income under sort of the S Corp umbrella. And let's say that Jan, doesn't have a crystal ball. She doesn't know how much money she's going to make. She finishes the year. She gets through October and she realizes that she's got, all this, if you add this up, is $47,400. She's like, hey, I need to make the S Corp election. Well, because she formed her LLC at the beginning of the year, she can work with her accountant. We can do what's called a late S Corp election. I know if you read the form, it says you've got basically 75 days to make that decision. Well, if you work with a competent CPA, there's a way to sort of backdate that to the date that the LLC was formed, all right? And Jan's going to go ahead and do that, and all this income is going to flow under the S Corp umbrella. Well, let's look at Bob. Bob doesn't watch my videos. He's not smart. He's not on YouTube watching this stuff. And Bob, thinks, hey, I don't know when I'm going to make this amount of money. I'll just operate as a sole proprietor for the year. Then, right, in June, he makes 12 grand. He's like, man, I'm gonna form the LLC now. All right, so he forms the LLC in July. Well, what happens in this situation? Well, he has this income only from July to December, because that's when he formed his LLC, to be considered as an S corporation, which is only $29,400. So he's gonna get, unfortunately screwed. He can't make that S Corp election. It's not going to make any sense because he only has $29,400 in profit as an S corporation. So he's going to get stuck with this situation. So he's going to get subject to paying the Social Security and Medicare taxes on all of his $51,400 of profit. All right. So that's kind of when to form the LLC. You should form it as soon as you start in business, because you never know how your business is going to do. And at least if you form the LLC, you've got the option to turn on the S corporation by using that late S corporation sort of strategy. Okay. If you wait and you form your LLC later, it might be too late for you. Okay. Now, I also told you I was going to show you where can you form an LLC for completely free. So let me show this to you. Right. I've got my website pulled up here, back here. So you just go to my website. It's navimuradcpa.com. There's many things on the website, but let me focus on this question first. Okay. Where can you go to file your business? Just look at these companies here. I've got 3 that have been compared for you. I compare what their fees are, and one of them, named Inc Authority, and even Inc File rather, has a $0 business formation fee. Okay, so you can go to Inc Authority just by clicking these links, either here or here. It's $0 to form the LLC. You just have to pay whatever the state's going to charge. So even if you do this on your own, you're still going to have to pay the state fee. Why not get the help of Inc Authority? All right. If you want to use their services to apply for the EIN number, you can do that. They only charge $49. You want to use them for a registered agent, it's $0 for the first year. The S Corp election, I believe, is included as well. It's $0 as well if you want to have them help you with the S Corporation paperwork, because it's a little bit challenging, all right? So just go to my website, click there, and you can form the LLC for free. If you don't want to use Inc Authority, use one of these other sites, right? There's 2 or 3 here for you to choose from. They're all very reputable and have thousands of business formations under their belt. So that's where you can do it for free. While you're on my website, if you want to learn about these strategies, I'm in the process of developing a course, okay? The course, let me just show you. If you click here to learn more, you're going to learn all these things. So the basics, I'm going to show you, how an LLC is taxed, what's an effective income tax rate, a marginal tax rate, how do taxes work for small business, what's a pass-through entity. We're going to learn all about that. Then I'm going to teach you about all these powerful tax strategies, right? The S Corp election, hiring your minor children, putting $50,000 in a retirement account in a single year, all right? Then I'm going to take it a step further and show you how to implement all those strategies within accounting software. So not only will you know how to do the strategy, but you'll know how to do it, which is more important than how or what the strategy is rather. It is how to implement it. Okay, so you can go in here and register for the wait list. As soon as the product launches, I'll send you a special coupon code that will make it very affordable. If you're watching this at a later time and the course is already in production, you'll see that here on my website. Also, if you want to schedule a Q&A session with me, you have questions, you watch this video, you can go there and schedule 30 or 60 minutes, or you can just watch all my video. My video libraries are here, and it's organized on different sort of categories for you to learn more about. Okay, basic tax concepts you should know, the LLC and S Corp, when not to be an S Corp, all that stuff. Which transitions me to, my last sort of point before I wrap this video up. 4 reasons that you should not be an S Corp. We covered one of them in this video, right? One is it doesn't make financial sense. You don't have the profit quite yet. The other one is you've got a high-paying W-2 job. So if you work for Google, right, in this example, and you make over 140 grand, and you have a small business, you probably don't want to make the S Corp election. I've got another video that shows you the details of that. You might live in a city or a state that taxes the S Corporation heavily. Here's a hint. It's New York City is one of those cities. Tennessee is another state, but I've got a separate video that covers some of the other states you might want to be wary of. The last reason why you don't want to be an S Corp is you're not subject to self-employment taxes to begin with, all right? So if you're dabbling in rental real estate, you're the landlord, you've got a tenant, your income's not subject to self-employment tax, so don't, bother with this sort of strategy, okay? It's not gonna make any sense for you. But if you're a YouTuber, you do affiliate marketing, you're a plumber, you're a dentist, you're an accountant, you're an attorney, you're an Uber driver, okay? You're a realtor, you receive a 1099, you should probably be an S corporation, right? Thanks so much for watching. If you got value out of this video, please do like the video, drop me a comment, subscribe to the channel. In a moment here, I will show that video, if you're watching on YouTube, to the 4 reasons when not to be an S corporation. If you're watching on some other platform, I may not be able to link the video for you. So just visit my website, navimurajcpa.com. It was a pleasure, and I'll see you in the next video.